So Bitcoin knew of the greatest rate hike ever, tight monetary conditions, and that financial institutions would fail due to tight liquidity in the bond market before, and it decorrelated. It led the stock market down. FTX failing told us that some big bank was going to fail. Bitcoin leading the way down, we knew the stock market was going to follow. Okay. Now, 2022 to 2023, correlation spikes again. Okay. It's because the Fed actually starts hiking, QT resumes, everything is correlated again because everything goes down for this period. Now, late 2023, early 2024, Bitcoin decorrelated slightly again because it knew that Yellen started printing money.
Bitcoin is unleashing a financial revolution, decoupling from traditional markets at a time when global capital is under extreme pressure. Tariffs are back with a vengeance, interest rates are off the charts, and corporate earnings are crumbling, all while equity and credit markets buckle under the weight of geopolitical drama and policy uncertainty. Massive corporations are struggling, not just due to weak fundamentals, but because the very ground beneath them is shifting, fast. Yet, Bitcoin continues to rise, undeterred. This isn't random volatility, it's a calculated, deliberate ascent. Bitcoin is no longer dancing to the old economic tune, it's moving to its own beat, independent of the forces that have long dominated financial markets. What was once seen as a high-risk, high-beta asset is now emerging as a uniquely differentiated store of value. Then came the pivotal moment. As Wall Street was frantically rebalancing portfolios, Bitcoin saw what was coming. The Federal Reserve rolled out the most aggressive rate hikes in history, and Bitcoin didn't just respond, it anticipated the chaos to come. As liquidity evaporated and major institutions floundered, Bitcoin surged, a quiet warning of the impending FTX collapse and the banking crisis that followed. As Jack Mallers put it, Bitcoin knew. It knew when to decouple from stocks, when to dodge the market crash, and when to spot the cracks before anyone else. While traditional markets were still staring at the wall, Bitcoin was already seeing around corners. And just when the Fed thought they had the system under control, Bitcoin caught the scent of Yellen's money printer warming up, before the ink was even dry. This isn't an asset, it's the truth detector for the financial world. Let's watch clips from Jack Mallers' interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
But if you are, you know that I've made a prediction this year that Bitcoin would diverge from its correlation with the stock market, and it would start to trade more like gold. It would start to trade as the independent asset it is. It does not have earnings. It does not have a CEO. It does not have a product. Bitcoin is money. Bitcoin is its own monetary policy. It's its own instrument. It's a commodity-like portfolio asset. It should not necessarily be correlated to a basket of stocks. However, it has been. I've talked about why I believe that is such the case. And I've said on this podcast and made a definitive prediction that this year, in the year 2025, we would start to see that become less correlated to the stock market. It would start to trade independently. It would go catch up to gold's performance and actually exceed gold's performance. So we've been saying on this show that these financial markets are buckling at the knees. They're going to collapse. You've got dollar down, bonds down, stock market down, mayhem, trouble, alert, alert. You've had the Secretary of the U.S. Treasury saying, we're focusing on the 10-year, we're focusing on the 10-year, we're focusing on the 10-year. And what have we said the last few episodes? Hey, buddy, wake up. The 10-year's going the wrong way. You're going wrong way down to one way, brother. Wrong way down to one way. The 10-year's going up. The 10-year's going up. The stock market's going down. Bad news. Danger, danger. Okay. Now, The Economist wrote a piece admitting all of this and saying this is the U.S. financial system is about donezo. We are in serious trouble. Guys, what we've seen since 2019 is if the Treasuries market gets unruly and gets out of whack, financial authorities will immediately step in and provide liquidity, print the money, support the system. Only way out is through. The only way out is through. Don't care what anyone has to tell you, where they went to school, what they do for work, who their mom or dad is. None of it matters. They have to print the money. As soon as the treasury market gets out of control, they scream, and they publish in all media, we will print the money. Now, we just heard from the Federal Reserve, the central bank that prints the dollars, okay, that they have the treasury markets back. Now we're hearing from the Treasury Department, the Secretary of the Treasury, saying the Treasury has the tools to print the money, okay? So now you're hearing from the Fed and the U.S. Treasury that when it comes to the bond market, when it comes to the sovereign debt crisis that Jack and the Money Matters podcast has been screaming about in this big empty closet, and everyone's like, is that guy 12 years old? Is he 30 years old? What's going on? I've been screaming sovereign debt crisis. Treasury market is unstable. None of this is going to work. They have to print the money. Buy Bitcoin while you can. Kicking and screaming and kicking and screaming. Now we're seeing it in the headlines. So 1, we've got the Fed saying they'll print the money. 2, we've got the Treasury saying they'll print the money. Now what's 3? 3 is the U.S. banking system will help print the money. Treasury explores whether to ease capital rule on U.S. bonds. This is the SLR. We've been saying this on this show over and over and over and over again. There is a rule that requires banks to post necessary collateral to use leverage to participate in the bond market. They are looking to revoke and change that rule so that banks can buy unlimited amount of dog shit debt for the U.S. government without posting any collateral. This makes them unlimited buyers supplying unlimited demand for a product that nobody wants, which is lending money to someone who's already $36 trillion in debt. Okay, so recap. The Economist comes out and says, we're screwed. The U.S. financial system almost just collapsed. The Fed then comes out and says, we will print the money. The Treasury Secretary then comes out and says, I will print the money also. The U.S. banking system then also comes out and says, please help us participate in printing the money. Printing the money. Fed Governor Waller sees tariff inflation as transitory. First of all, let's break this down. It's an admission that tariffs are inflationary. Let's not let that slide. Embedded in this statement is that tariffs are inflationary. They're just saying it's transitory. By the way, guys, their admission of saying it's transitory, all they're saying is we're going to print the money anyway. We're not taking it seriously. It's transitory. It'll pass. We don't give a shit. That's what they're saying. Okay? So let's recap. The Economist says, little does anyone know the U.S. financial system was about to fall apart. But we knew on the Money Matters podcast, we knew because we've been saying dollar down, bonds down, stock market down. This isn't working. Mayhem, mayhem. They're going to have to print the money. We knew. We knew. The world didn't know. We knew. The world didn't know. Economist says the U.S. financial system is about to fall apart. Then the Fed comes out and says, we will print the money. The Treasury comes out and says, we will also print the money. The U.S. banking says, change the rule so that we can also print the money. Then the Fed says, oh, yeah, in this worry about inflation because of tariffs, transitory, AKA, we don't give a shit. We're still going to print the money. What you're looking at up top is the Bitcoin price, okay? So this is just BTC USD. We're currently at $87,000, okay? Makes sense? Now, what you're looking at below is Bitcoin's correlation to the QQQ. Now, this is where it gets very interesting. Let me set some definitions for you. This number down below, its correlation to the stock market, ranges between 1 and -1, okay? 1 means very strong correlation. Wherever the stock market goes, Bitcoin goes, or vice versa. -1 means inversely correlated, where if one were to go up, the other would go down. If one were to go down, the other would go up, okay? 1, extremely correlated. They follow each other. -1, inversely correlated. They run away from each other. 0 means no correlation, When I pulled this up, I surprised myself because, yes, Bitcoin at times is very correlated to the QQQ. However, at other times, Bitcoin has no correlation to the QQQ. And this seems to be a pattern. Bitcoin rests and sits at just about as correlated as it can get to the stock market, and then it decorrelates and separates itself pretty dramatically and then returns. Pretty dramatically and then returns, right? Are you guys able to see this blue line? Now, what does this tell me? What this tells me is Bitcoin, like the stock market, has just gone up. It's been one of the better expressions. In my opinion, Bitcoin's the best expression of currency debasement. The more money they print, the better Bitcoin performs. That's why it's been the best performing asset in human history, especially during this currency debasement period, because you can't make any more of it. It's the scarcest thing. It means it's the best performing thing.
On April 22nd, Bitcoin blasted through $91,000, right as gold soared to new stratospheric heights. The markets are buzzing with whispers of an impending economic apocalypse, and traders are piling in, chasing the gold rush while grappling with global trade tensions. But the burning question remains: can Bitcoin shatter the $95,000 barrier? In typical market conditions, Bitcoin's futures premium hovers between 5% and 10% to account for those long, nerve-wracking settlement delays. But right now, a measly 6%. That's far from the firestorm that screams bull market, even though BTC surged a mind-bending $6,840 from April 20th to April 22nd. Some sharp-eyed analysts believe this is Bitcoin starting to decouple from the stock market. Traders are haunted by Bitcoin's inability to hold the line above $90,000. Remember March? Bitcoin touched $95,000, only to plummet to $81,464 the very next day. This unpredictable roller coaster ride since the mind-blowing 109,346 peak in January has crushed investor conviction. Meanwhile, gold just keeps hitting new highs, leaving Bitcoin to play catch-up in a market that feels increasingly out of sync. The stage is set for a showdown. Will Bitcoin defy the odds, or will it crash and burn? Let's watch more clips from the interview.
I've often said that Bitcoin is the most accessible smoke alarm to fiat liquidity. It smells blood first. It smells bullshit first. When you have an asset that is an entirely free market, there's no circuit breakers. There's no market open and market close. There's no regulator overseeing it. There's no one saying you can or can't buy it. Bitcoin is a global fiat smoke alarm, accessible to everyone. It moves first. So when I saw this and I realized these peaks and valleys of correlation with the stock market all had to do with macro events that were happening in the real world. Mid to late 2020, the correlation was rising because of COVID. Everything sold off, right? Brief correlated spike. Massive QE, zero rates, trillions in fiscal stimulus. Everything went up in the COVID era. This microphone went up in price. Your eggs went up in price. Bitcoin went up in price. Stocks went up in price. Okay. Now, late 2021, early 2022, right here. You guys see this dip right here? The correlation faded. Bitcoin went from severely correlated to not correlated at all because it smelled blood. This was as the Fed stopped printing money, started the greatest rate hike ever. FTX went under, Silicon Valley Bank went under. All of that happened. Bitcoin smelled it first. Bitcoin smelled it first. So what these giant uncorrelated dips, so this is Bitcoin dipping from being extremely correlated to the stock market to not correlated at all. It starts running, it starts moving because when you have a truly free market, it's going to tell you the truth. I think of Bitcoin as a truth machine, okay? There's no one in the way. Bitcoin is pure humanity. There's no company, government, corporation, market open closes, circuit breakers in the way from humans pricing time and energy globally. As soon as Bitcoin smells blood, it smells the money printers, it starts to run and it decorrelates, it leads. Eventually, guys, Bitcoin and the stock market have to have some correlation because everything's going up, right? If they print enough money, everything goes up, right? So you can't have no correlation to the stock market because everything, like this microphone in the stock market have correlation. This water bottle in the stock market have correlation. My iPhone in the stock market have correlation because they're printing so much money. Everything is more valuable in dollar terms. But what's interesting to me is when it shows little periods of not being correlated because it's a more free market. It's a smarter market. Okay. Now, again, this severe decorrelation event where it went from extremely correlated to no correlation, that was right around the election. Okay, so these recent run-ups, Bitcoin was at 30,000 in late 2023. Bitcoin's correlation went from a 1 extremely to a 0, not at all, and it ran first before the stock market. Okay, again, Bitcoin went from near a 1 correlation to a negative correlated. When was that? Right before the election. Bitcoin knew who was going to win the election before anyone. It's a truth machine. Free markets tell you the truth. Is Bitcoin going to continue to fall, go below 0.5 and head towards 0 again? Because what is that telling us? To me, that tells me that Bitcoin smells blood. It smells the money printer. Somehow it's reading the Financial Times. It's reading Bloomberg. It's reading The Economist, and it's seeing fiat liquidity is around the corner. Currency units are about to be abundant. They have to print the money. Now, guys, being more practical, Bitcoin can't read an article, right? It's a protocol. It's bytes of data. But more practically, if they start making monetary conditions easier, if there is more fiat sloshing around, the market that's most sensitive to that, the markets that's going to move first and perform the best is Bitcoin because it's the most free market and it's the most fixed market. That's it. Period. End of conversation. No debate. So when I saw Bitcoin start to decorrelate and it went from a 1 to a 0.53 and I made this chart, I was like, oh my goodness. Bitcoin's not necessarily correlated to the stock market or not correlated to the stock market. It's both. And it chooses its times to decorrelate and lead when massive world events are happening. And it affirms my suspicion and my predictions. This is slight validation. We're not there yet, but it's very slight validation that Bitcoin will decouple this year. It will lead the stock market up. It smells the money printer. And we are about to go way higher. Bitcoin decorrelates from the stock market. It decorrelates from this risk idea because it leads. It's a truth machine. It's the only free market we have left. It's the only fixed supply market in the history of mankind. The only other asset of yours you can't make any more of, no matter how hard you try, is your time. Time in Bitcoin, only fixed supply. Everything else, if there's enough demand, you'll make more. So Bitcoin is talking to us. It's telling us something. It's starting to decorrelate. In my opinion, it smells the money printer. It smells the Fed, the Treasury, and the US banking system saying, we almost crashed the economy. We are coming to save the day and print the money. Print the money. I've been saying it on this show over and over and over and over again. Bitcoin will decorrelate from the stock market. Bitcoin will trade like gold. Bitcoin will catch up to gold. Bitcoin will outperform gold this cycle. Be patient, stay humble, stack sats. In my opinion, what gold is pricing in is a new monetary order. Central banks already own gold. Governments already own gold. So it's a familiar asset that would be neutral, that would be in a post-dollar world reserve currency. And so, in my opinion, all that's happening is people are starting to price in this idea that gold is going to be more relevant and more valuable in whatever future realignment of global economic trade is going to go down. There's just no doubt that things are changing, right? There's no doubt. Now, what's unclear is what they're changing to, how and when. Gold is getting a bid because there's a really serious chance gold's going to be more a part of the global story than it has been in recent decades. That's all. Also, listen, right now, the only way out is if real yields are negative, meaning if they put the interest rates below inflation. If everything around you is getting 5% more expensive a year and they're paying you 3% to lend them money, then your yes, you're making 3% on the money that you're lending, but everything else around you is getting 5% more expensive. So your real return is negative. Does that make sense? That's the only way they can do it. Now, it's safe to say that gold's real return is 0. Okay. And you say 0, that's not a very high number. Yeah, but 0 is better than a negative number.
As Bitcoin surges past $90,000 amid stock market turmoil and a tumbling dollar, a profound shift is underway, one that validates what forward thinkers like Jack Mallers have long argued. This isn't just another crypto rally. It's the market voting with its dollars that Bitcoin operates on a different playing field entirely. The numbers tell the story. While the S&P 500 and dollar index have lost 5% this month, Bitcoin has gained 9%, outpacing even gold's 8% rise. More tellingly, Bitcoin's 30-day correlation with the S&P has dropped to just 0.65, a significant divergence from historical patterns where it typically mirrored equity sell-offs. This decoupling suggests investors are finally recognizing Bitcoin's unique value proposition as a hedge against monetary instability. The timing couldn't be more poignant. As political pressure mounts on the Fed to cut rates and the Treasury explores extraordinary measures, Bitcoin's surge coincides with $381 million flowing into spot Bitcoin ETFs, their biggest single-day haul in months. This institutional interest underscores a growing realization. In a world where traditional financial systems show increasing fragility, Bitcoin's fixed supply and decentralized nature make it the ultimate insurance policy. What we're witnessing is the maturation of Bitcoin from speculative asset to legitimate safe haven. As Mallers has presciently noted, Bitcoin smells blood in the fiat system before others detect it. With key resistance levels at $93,000 and $95,900 now in sight, this breakout may mark the moment Bitcoin truly came into its own as the 21st century's most resilient store of value. The great decoupling isn't coming, it's here. As we wrap up, if Bitcoin breaks $95,000, where do you see it heading next, and what's your game plan? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.